What's up, guys? Good morning. Welcome in. Good morning. Hope you guys are doing well, having a good week. Let me know in the chat if you guys can hear me, see my screen. Appreciate that. Get into the analysis here. A little bit of a tricky location now this week. Share my charts here to show you guys what I'm watching out for. You guys got me? Audio, video check. Awesome. Good morning, Ishan. It's going good, man. Good morning, Tobias. Welcome in, guys. There we go. Now the chat's awake. Wake up, guys. It's time to trade. Just kidding. It's time to be very patient in the current market conditions, right? So let's briefly talk about some fundamentals first. Let me pull up my little analysis here on market AI, which I like to go over. One sec. It's generating a report. So a lot going on this week, a lot of high impact news. ES tried to break down kind of these multi-month lows that have held around 67.85 plus or minus a bit. Recaptured pretty aggressively once again. The VX tried to rally, tried to break out, also rejected. Still holding above 2021s. I think we are seeing right now the largest put positioning by institutional players ever on records, right? So everybody has insurance for the downside right now. Everybody has insurance for the downside right now, which might be part of the reason why we haven't really broken down, because nothing has really come out that's going to panic sell the market off when everybody's kind of already positioned for that to happen. So there's not a ton of reason for the underlying to be sold off when everybody's already got insurance for the downside. So interesting perspective there. Let me take a snip here on this. Actually, let's talk about this first. So just kind of a quick overview, fundamentals here. Equity index trackers exhibit mixed performance with cautious undertone. ES and NQ lean to neutral to bearish, and profit-taking pressures, while SPY and QQ show resilience. A little bit of a divergence between futures and the underlying. Common themes include sensitivity to the tech sector, which we know about. A lot of the tech sector has been hit hard by AI disruption fears, and huge spikes in VIX positioning, right? Like I talked about briefly, a lot of people are already kind of positioned for the downside, which we can see with the elevated VIX. Divergence between broad market indices, NASDAQ proxies, macroeconomic uncertainty. A lot of that is due with the overall Iran, Israel, United States stuff, kind of unsure how much that's going to continue to escalate, and if it will be over in a few days, a few months. You know, the last few times we've had things like this in the Middle East, it's dragged on for years and years. So I think that's kind of in the back of a lot of people's mind, if it could turn into something a lot more drawn out. All right, let's go over the technicals briefly here on ES and NQ. Let me check the chat. Sure. Good morning, Nick. Good morning, Saeed. Ishan. Yeah, ping pong markets. This is a very, very sideways market. And this is a daily chart here on ES, really going all the way back to October of last year, right? We're basically just sideways. So very, very sideways market, very, very hard to get continuation in one direction. I've talked to a number of traders across the board, traders that work on Wall Street, other traders that are, retail traders, profitable traders of various strategies. And I think unanimously across the board, the last couple months have been difficult trading conditions, right? So what I'm watching out for kind of going forward is basically since February, we had an especially sideways market kind of in the middle of this multi-month sideways range here, right? So that's what I've been drawing a volume profile and just kind of watching this range that we've been in here since the beginning of February. And we had a brief breakdown of that earlier this week, a couple days ago, and you can see we aggressively recovered right back in here. And so now we're kind of right back in the absolute middle of this area, which is kind of around 68.80. We broke just over that, and we're starting to kind of pull back here a little bit now. But yeah, very, very middle of the higher time frame range. We have NFP news coming up tomorrow. So in my opinion, it's extremely important in these conditions to just understand what's going on, understand the current location that we're in, and be very, very patient. And a lot of people are too short-sighted in their trading, and they want to make, all the money right now, every day, and not maintain like the longer, like obviously the market is not going to stay in this range forever. Like we will be out of this. It's been an extended period in this sideways range, but we will go back into downtrend, uptrend type conditions where we have better directional moves, better volatility, et cetera, right? So this is just a period of time right now where the market is in this sideways condition. And the best thing that we can do is continue to follow our systems, continue to be very patient and disciplined for key locations and setups. A question, I trade NQ looking at IndX. Should I looking at ES and SPX side by side? I trade both the NASDAQ and the S&P, primarily the S&P, but I always do analysis on both to understand what's going on. Understand if there's divergence in sectors going on, understand if there's not, and there's very kind of across the board trending type move or across the board, sideways action. That can help you avoid being faked out, right? If ES or NQ makes a directional move and nothing else does, right? And you see it's substantial divergence. Well, it's unlikely that that's going to probably continue. The best directional trending moves happen when multiple indices kind of across the board are all directionally moving, right? And that's not always the case. So that kind of helps us do analysis using multiple things like the VX, NQ, ES, and even the Dow sometimes and other stuff, but primarily just ES and NQ, and see when true moves are occurring or when it's likely that you could get faked out. And that also helps you to play the fake out setups when it's appropriate. So I think it adds a ton of confluence. Very good to at least, even if you only primarily trade one, still do analysis and understand kind of where the overall markets are at and conditions, and if everything's kind of moving directionally, or if there's kind of mixed divergences, or if everything's kind of moving sideways together. That it really is super valuable to understanding the overall context, and helps you put together much higher quality trades, in my opinion. So a little bit of sell-off here since like 850. Coming in towards these pre-market lows, but we'll talk about it. So I wanted to first, just as always, kind of refresh our view of the higher timeframes here. You can see we're essentially just middle of the range, kind of balancing. We had a really strong directional rally after we failed to break these lows here. Really strong directional move. You see this whole wick here. We pulled back a little bit, held, rallied all the way back up into the highs of this prior range around 6,900, just a little under. I think we ended up rallying, right up to 6,900 there. So the top of that range, just above the midpoint of this range that we've been in since February, right? So very important to maintain that perspective of where we're at. Okay, let me pull up. NQ has flipped a little bit relatively stronger. Let me drop this in the chat here, and we'll talk about NQ here. So NQ has flipped a little bit stronger. You can see this consolidation range that we were in for quite some time, right? We had a fake out to the upside, failed to sustain above, had a fake out to the downside, failed to sustain below, and back just sideways in this range, okay? But on this recovery here, you can see how we left, we broke the prior highs a lot more significantly yesterday than we did on ES. And so far, we're pulling back and kind of holding right around this area around 25,000, right? So we had a relatively stronger upside move. And also, if you note these prior lows, we didn't dip on that fake out like dip that ultimately ES made. NQ did not dip as far down as NQ. NQ didn't even break these lows from the last couple months, whereas ES did. It came down here, did not dip as low relatively as ES, and recovered more violently than ES did, which is a little bit of a divergence because over the last few months, basically year to date, NQ has been relatively weak compared to the S&P, mainly due to the software sector being hit so hard by AI disruption fears, right? So now going into today, so far, since the last couple days, NQ has actually flipped a little bit stronger, having a little bit stronger bounces, right? And so all that means is if that continues, right, if we're playing kind of just intraday volatility, intraday scalps, we might see, you know, more aggressive upside pops on NQ. So it may present better opportunities to scalp moves to the upside on NQ, realize higher risk versus reward. More if NQ is relatively stronger, it may offer better opportunities to scalp to the upside. It may, right? We'll see. Not saying anything is for certain. All right, now let me pull up some other charts here. I want to pull up, I like this drawing tool that I have on Tradeovate to check out the 4-hour charts with a volume profile. So let me pull this up. I haven't pulled this up yet. Yeah, here we go. Let me redraw it really quick. Share that with you guys. Give me 1 second, guys. And if you guys have questions throughout the chat, let me know. ACH asks, where can I find your playbook or course? In the description of my YouTube video and this channel, I run a group called Flipping Futures where I do live trading every day, and I do coaching and mentorship. That's the main focus of that group. So I do live trading and I do live coaching sessions every week. And that's also recorded for new members to review as well, or current members, and it's saved in a course format as well. So there's pretty much like a whole order flow trading course at this point from all the live trading sessions that we've done. And it's a very low cost, just like monthly subscription. You can cancel anytime. I decided not to do one of these things where I train people and it's very difficult to get into, very expensive. I just made it a low cost thing so anybody can, you know, pretty much get that information. But I talk about I've gone through in-depth training sessions on a lot of the setups that I trade, how to analyze the order flow for those setups, etc. And that's all in there. Again, this is not a big sales pitch, but just answering your question, ACH. Doing these YouTube streams for the purpose of, you know, just helping you guys go through analysis, get prepared for the day. All right, so let's check out. Dennis asked, do you stream the New York Open? I do in my private coaching group. Like I just said, I jump here on YouTube to go through analysis with everyone and help you guys out. I go through a lot more in-depth information with the people that I help on a more focused daily basis in there, right? So I don't do the live trading for the purpose of like entertainment or sharing signals. It's mainly focused on coaching and education and teaching people how to trade for themselves. All right, so looking at ES here, this is a 4-hour chart with the volume profile drawn going back to the beginning of February. Okay, so I bring this up. I don't always do this, but since we've been in such a sideways range for the past month or two, especially since the beginning of February, we've been in a very sideways range near the middle of this kind of higher time frame range that we've been on for a couple months now. So it's very important to be aware of the location here and understand the bell curve of volume distribution, right? So in balanced markets, we see bell curve volume distributions like this because there's a lack of participation at the auction at the extreme. Buyers and sellers roughly agree on price in the middle of this range, right? The market is just an auction. And we see that there's a lack of participation to the upside, lack of participation to the downside. Buyers and sellers are roughly agreeing on price here in this range in the middle, right? So it almost acts like a rubber band where anytime the market tries to auction outside of that, it snaps back into the middle, right? And so typically in balance range conditions, that's exactly what I look for is these areas at the extremes to fade them and just target back into the middle. Anytime we get too far out until we get a true break one way or the other where pops then fail to reclaim back inside, then that's a true break of structure that we then understand like, okay, now let's play shorts. Now let's play longs if we get above or below that, right? But it's important to understand this, for one, to identify when we do get a true shift in structure, and two, understand as we're still in these conditions, right? One, it's not a high quality opportunity to execute things in the middle of this range, right? Price action is very choppy, very wicky, very difficult to get an entry with continuation in a direction, right? So even if you end up getting the direction right, it can be very difficult to capitalize on it because it's doing this, right? And you end up getting either stopped or taken out break even as we, move one way or the other, right? The best opportunities in these conditions is to sit back, wait for failures at the extremes to fade them. Does that make sense to everybody? So that's why I've been really harping on sitting back, staying patient, and identifying this range that the market's been in for the last month and a half, right? We tried to get under it here. So I was actually, I didn't do a stream yesterday. I missed the YouTube stream yesterday. I had some other stuff going on, had to take care of my kids, but I missed the YouTube stream yesterday. So I apologize for that, you guys. But 2 days ago, I actually was seeing this breakdown and traded shorts on this breakdown. I ended up making a little over like 20 points or something like that. But my trailed stop got hit because we ultimately did not sustain the breakdown under here and recaptured, violently back up into there, right? And again, part of that I think is because from a macro perspective, like I talked about before, pretty much everyone is already positioned for the downside, right? So it's to no one's surprise, really. Like the biggest downside moves happen when it catches a lot of people off guard and the market starts panic selling. But right now, everyone and their mother is positioned for the downside with puts, right? And we can see that positioning via the VIX and everything. And it's very public knowledge. You can look up right now. This is the largest, I think, positioning ever. Now, that doesn't mean we're not going to break down. We may still break down. However, it's been faked out a lot of times because there's not too much pressure for people to really panic sell. That's going to cause this market to drop because everyone's positioned for it already. Everyone's got insurance for the downside already. This is a 4-hour chart looking at the past month. So going back to the beginning, you can see February 3rd. So going back to the beginning of February, this is a 4-hour chart with a volume profile drawn on it. And you can see this is what I was talking about, like the point of control from the volume profile right here around 68, 80. That just tells us that's where the peak amount of volume is transacted, right? So inside this yellow range is the 70th percentile. So 70% of all the volume has been transacted inside this range. And you can see the peak of that is right here in the middle around the 68.80 area, right? So that's where the market is just like most balanced right now. There's no real true edge here. Now, if we have taken out these lows and we're trying to recapture, and if we can't break back up above this point of control, you know, that could be a sign, okay, now the market is truly very weak. We failed to get back above kind of the midpoint of this range, and then we break down. That's all well and good, but just understand right now, like the market's still in the middle of the range. And you want to be very careful being too speculative of what you think is going to happen next before it actually happens. Right? Let me copy this. Nick Stimler asked a good question. He said, when you're a member in Flipping Futures, do you watch a stream? Is it also in YouTubers? And it's in a Discord because the streaming is much, much faster in Discord than it is here on YouTube. It's much more real time. There's like a several second delay here on YouTube. And then it's also in WAP, which is the platform where you actually join the group from. They have a live streaming feature in there. Sometimes if there's issues with Discord connectivity for some people, it's a failover. People can join in WAP, and the stream is very fast there too. So there's two places you can join in the streams. Also in WAP is, you know, there's over a dozen hours of live training for order flow trading, coaching sessions that I've gone through that you get access to. And also all of our previous live streams are recorded there. So if you want to review, you know, there's probably hundreds of hours of live trading in there that you can review, live trades that I've taken, you know, live analysis that I've shared. So if you want to help your learning curve, you can go back and watch the live trading sessions where I've shared, you know, an insane amount of information for trading. Right. All right. So we'll briefly look at NQ here. And then I'll talk about more specifically the setups that I'm kind of watching out for. And so similar, how you could see that point of control area on ES, how we were holding just below it here in the pre-market, you can see how we're actually back above that. So this is a volume profile drawn on NQ here. Again, same exact time frame going back to the beginning of February. And you can see that bell curve volume distribution here as well. We can see how the market is mostly sideways, choppy, balanced inside the middle of this range around this point of control area here, which is around 24.9-ish on NQ here. And you can see how after this dip at these lows, NQ actually flipped relatively stronger and is actually holding better back above. So a little bit of a divergence where ES is still kind of lagging back weaker, and NQ, so ES is actually holding kind of down here below the midpoint of this range that we've been in for over a month. NQ is actually holding up relatively stronger up here above, right? So if ES continues to find some support and continues to bounce, we may see a more exaggerated pump back to the upside on NQ. And on the flip side, if NQ rolls over here and gives up this rally and breaks down, we may see a more exaggerated breakdown on ES. Does that make sense to you guys? How I'm kind of using that information? All right. So moving on, let me pull up a different view. My chart here on Sierra chart with a 30-minute, it's a 30-minute chart with a volume profile or intraday, and talk about some of the things that I'm watching out for. I'm very much watching out for today to turn potentially choppy, less volume for sure, because we have NFP coming up tomorrow. That's a major data release that impacts the markets, positioning and stuff. You know, most people, I think most bigger players are already priced in for that. But if it is a surprise, the data and not what's expected, then that could cause some major volatility. Okay, so looking at this now, we're seeing that kind of fake out dip that we had earlier in the week. Super aggressive recovery there from buyers. And you can see this area kind of turned into a demand area here where all this volume was built up. So there's a lot of people participating in the auction there. Once we rallied above that, pullbacks then held this area here, right? So around on the break, and that's also a key whole number here around 6,800. Right. So on the break of this, where all this volume was transacted, we recovered back above there, pull back into here, held, and we had another aggressive rally out of there. Okay. So that's a key area. Now we came up to this first point of resistance here, which is where we had all this volume at this high before that breakdown, right? So this is kind of an area of supply, right? There's a lot of sellers positioning in the market here up towards 6,900. And you can see that by all the volume built there that we sold off from. You can see how that's the area we've now rejected from. Once yesterday, the market could not get above that, tried again in the Asia session, could not get above that, tried again overnight, could not get above that. And now we're starting to sell off from that, right? So you see with volume, how we're able to basically identify what you would look at on a candle chart, which is like a consolidation and a breakdown. We would call that like a supply zone, but we can see it more accurately and more precisely with volume profiles here with the chart to identify, okay, where are people? Because where there's volume is where there's people, right? Or algos or whatever. You know, somebody's money is on the line there when there's a lot of volume built up there. People's money is there, positions are there, right? So that's where true supply and demand zones exist, right? So you can see this consolidation here. We sold off from the volume there, and then we've tested that one time yesterday, could not break out above that, tested again in the Asia session, could not break above that, tested again overnight, could not break above that, and now we're selling back from there, right? So near term, these are some key areas. I would say a moderate key area is here, yesterday's pre-market consolidation as well. Right around 68.50. We had this little consolidation that we rallied aggressively out of there. Not as significant to me, to be honest, not as significant, but it is a key spot that we need to watch here, especially considering how NQ is actually holding up relatively stronger, right? So what I'm watching out for here this morning is one, you know, we're kind of forming this larger amount of volume here. Since yesterday, ton of volume there, a little bit lower volume here, right? But there's a lot of volume built here. If pops fail, if we get pops that continue to fail under this 6880 to 6890 or 6900 rather, if we see pops fail under there, I may have used that as a short-term opportunity to look to scalp to the downside and just target this area. That's kind of already played out though. So less quality. If we break this area down here and pops hold under here, I may be open to scalping that again for the downside coming back to retest this area around 6,800, 6,790. Those are kind of the nearest term like downsides, and that would be kind of a break and retest. You can see the value area low from yesterday right there. This was also this kind of consolidation rally area. It was also the overnight low. So if we break under there and pops fail to reclaim and we hold under there, we could see continuation down towards the 6,800 again, or at least like these little lows here around 6,810, right? On the flip side, if we again see, and this will also be a divergence scenario where if NQ really fails to break down and ES just kind of dips its toes under those lows and recaptures aggressively, it may offer an opportunity to actually play it long and then target a retest back up into the 6,800, 6880, 6,900 area. If today flips super strong and we get a massive move that holds above this, then I may look to target a move back up here towards these prior highs up here. Right? So those are a few scenarios that I'm watching out for. Again, it's going to be very much reading the order flow, what develops intraday, and how to play that. Again, the analysis and setups are pretty much the same on NQ. It's just with the understanding that NQ has been a little bit relatively stronger the last couple of days, right? So maybe upside scalps are a little better on NQ. So that's all. All right, guys. Thanks for tuning in today. I'm going to end the stream here. Head over. If you're in the Flipping Futures community, I will be, back live for the live trading session as always. Thanks for joining in here this morning. I hope you guys got value out of this, and I will see you guys back tomorrow. Big day tomorrow for NFP, so heads up for that one. If you guys have questions that I didn't get time to answer to here on the live stream, the best way to reach me is just send me a DM on Instagram. I'm very responsive to helping people out on there as well. All right, see you guys back here tomorrow. Peace. Oh, actually, tomorrow, one last thing. Sorry. I will be live on Chart Fanatics tomorrow on Friday. So on Fridays, I'm live for free on YouTube with Chart Fanatics, so you can tune in there. Just a heads up there. All right. Peace, guys. Thanks.